basically anybody who holds this bond throughout its full life is guaranteed to lose money, and they're guaranteed to lose money over a period of 30 years. Now, what this is telling us really is that anybody who thinks that this is a good investment is factoring in an extremely bleak economic outlook. You're talking about no growth, no inflation for the next 3 decades.
Right.
That's that's a pretty poor outlook that the market's currently pricing in.
I also wonder how many people are just buying these to flip them, because, Tommy, the price appreciation in bonds this year has been incredible. You could have made a ton of money just owning bonds and flipping them, maybe flipping them back to the central bank. So is the European Central Bank in part to blame for this because they're doing so much bond buying? And they told us last week in September they're going to announce even more.
Absolutely. The European Central Bank is really at the heart of this trade at the moment. They're not buying bonds at the moment. They've wound down their QE program. But because inflation in the Eurozone is so persistently low, because growth stubbornly refuses to pick up, they've basically signaled that a new package of easing is on the way in September. And investors really are assuming that means more QE, more bond buying by the central bank. So you're absolutely right. If you buy this bond today, yes, it might look like a poor investment if you hold on to it for 30 years. But if you can sell it onto the European Central Bank for a higher price,
right,
possibly as soon as next month, then that doesn't look so bad after all. And bear in mind, these bonds have returned something like 30% in price terms already this year.
Yeah, they're like, it's the hottest market in the world, one of the hottest we've seen in the past decade.
Absolutely.
So another way, obviously, if you're looking for growth, and we know Germany is really slowing, it sounds like it's exposure to China that's a big reason there, is fiscal stimulus. Why are we not hearing more from Europe, whether it's Germany or other countries, about fiscal stimulus?
I mean, it makes sense, doesn't it? If you can get paid by investors to borrow, surely you should be borrowing more. Now, we are hearing early rumblings from inside Germany that their refusal to countenance running any sort of budget deficit may be beginning to shift. I mean, it's early days yet. It's something that's hardwired into German politics, that you run a budget surplus, you govern in a fiscally responsible way. That may now have to start to change because, as you say, the German economy is really suffering. You're talking about an economy that is geared to world trade, that where exports are an extremely important part of the economy. And when there's a global trade war going on,
right,
an economy like that is going to be first in the firing line.